Good afternoon and happy Friday. Welcome to the Market Close Report for Friday, the 22nd of May. Well, at least we've managed to put together a small winning streak of 2 days. In fact, the ASX 200 rose today, not by much, by about 35 points or 0.4% to 8,657. But that improvement was just enough to get us into positive territory for a week that has actually been quite volatile, unusually large moves day to day for our share market. In fact, we had an improvement of roughly 1 to 1.5% on both Tuesday and Thursday, today as well. And then we had pretty significant losses on Monday and Wednesday of around 1.5%. A lot happened this week as well. We had the ASX 200 sinking to a 7-week low on Wednesday, down below 8,500 points for the first time since the 31st of March. We've also only had 8 improvements in 5 weeks now, so it hasn't exactly been going gangbusters for in recent times locally. We've also had conflicting signals day to day as far as progress being made for a peace deal in the Middle East. Nvidia, the world's largest company, came out with its results yesterday as well. The bond market has been throwing out some concerning signals, but things have calmed a bit in the past day or so, and partly this seems to be off the back of an update on jobs growth, which was out yesterday. Now, the Aussie unemployment rate rose to 4.5%, the highest it's been in close to 5 years. Obviously, that's not great news, and it is just 1 month's worth of data, so we can't look into this too deeply. But markets seem to take solace here, and basically it's pushed out the market's expectation for whether or not there's going to be an interest rate hike from here in Australia. So the market is now pricing in potentially a 1 rate hike by December. Last week, markets thought that there could be an interest rate hike by September. So how quickly things can change. As far as sectors go today, though, we've had a mixed bag. 4 that underperformed included communication services, which fell by close to 2%. We also had the utilities down 1.1%. Property stocks down about 0.9%, and consumer discretionary down just a touch. Outside of that, there were improvements everywhere else. The only 2 which seemed to do, outperform, I guess, were the materials, which are up by more than 1%, and energy stocks, which are up around 1% as well. Now, there were a bunch of winners on the market today. One was Guzman y Gomez, the Tex-Mex fast food chain, 9.5% higher today. Now, it rose 13% yesterday on a broker upgrade as well. Today's improvements seem to have a lot to do with its decision to close its US operations and instead focus on the Aussie market. Now, pretty big decision. It's been wanting to expand in the US for a while now, but I think it's cutting its losses here, considering it's been finding it very tough to gain any degree of traction. Not surprising, really, considering there's a lot of competition in the US from the likes of Chipotle, which already has around 4,000 stores and very extensive brand awareness in the United States. Monadelphous, around 2.3% higher. The engineering firm announced a number of new contracts with miners worth around $120 million. That includes a couple with Rio Tinto, one with Fortescue Metals, where it's going to build out a battery energy storage system in the Pilbara, and also doing some work on a coal port in Newcastle in New South Wales. Appen up around 9.4% as well. It's been one of the more volatile stocks on our market in recent years, but today the tech company reaffirmed its revenue goals at an annual general meeting, so it reckons it might make as much as $300 million in revenue. For those who don't know, Appen basically provides quality data that's used by some of the world's largest AI models. We've also had Mayne Pharma lifting by close to 3% today. The drug maker had a bit of a windfall, $13 million in legal fees, which have been awarded from a basically court action against US pharmaceutical group Cosette. Cosette was trying to basically back out of a proposed takeover for the company, and it lost in the court in New South Wales. This was a case that was put forward back in June last year. Now, there were plenty of losers on the market today. Insurance Australia Group, or IAG, the group, of course, behind NRMA Insurance, down 3.5% today on the receiving end of a broker downgrade. The broker thinks that there are some risks as far as costs associated with the collapse of Greenshill Capital, and about $7 billion in legal claims that have been filed against the insurer off the back of that. Also, Seek, the job search website, down by close to 6% today. Weaker jobs market, not particularly helpful, obviously, for a a company that wants more jobs to be advertised. Greater economic uncertainty globally, the disruption that AI is causing to employment as well. All of these things not in favor of SEEK. Nick Scali down by around 2.2%. At one point, it actually was having its biggest fall in around 14 weeks. And there was also a spike in trading volume. Not too much news around today, though. And Zipco also down in the order of 2.7%. Now, if we cast our eyes forward from here, there won't be a huge amount of economic news out globally tonight, but we do have a bit of a change as far as leadership in the United States of the Federal Reserve. So Jerome Powell's last day today. He's going to be replaced by Kevin Warsh. So this is obviously a big move, something that we knew was happening though, so it's not really a big surprise to markets, but still a major event nonetheless. Now, next week is going to be another pretty big one. The main thing to watch out for as far as what's likely to move markets locally is going to be an update on inflation. That's going to be out on Wednesday here in Australia. Now, we'll be about 3 weeks out from the Reserve Bank's next decision on interest rates. That jobs report yesterday, which was softer than expected, has just pushed out the next rate hike date as far as how markets are currently pricing it in. But that inflation report on Wednesday is going to be quite important, particularly to see if there's any evidence that cost pressures are broadening away from fuel and other Middle Eastern related events. Outside of that, we've got quite a few profit results from the likes of Nufarm, Champion Iron, Web Travel. We've got a bunch of investor briefings and AGMs as well. And it's also a holiday shortened week in both the United States and the UK, and actually also Germany as well on Monday. So we'll be looking to other markets early in the week. As far as currencies go, the Aussie dollar has softened against most. It's sitting at about 71.3 US cents, about 61.4 euro, and around 113.5 Japanese yen. Have a great evening, everyone. Make sure to tune in to the morning podcast and video Monday morning. Have a great weekend.